Now, of the many data metrics out there to evaluate what's going on in the crypto sphere right now, TVL, or Total Value Locked, is potentially one of the most important, but one of the most underrated. It's taken quite a knock in the last few months, and we're talking now with Bejamin Stani of Matrixport to figure out exactly what's going on. Benjamin, many thanks for talking to us as always. Listen, how important a metric is TVL compared to everything else going on in crypto right now?
TVL is one popular metric to evaluate the health of an L1, layer 1 or a DeFi protocol. It basically shows how much economic value is contributed to that chain. What we do see is that TVL has come down in tandem with physical prices of crypto, and that's something natural that you'd expect because we're looking at TVL in dollar terms. Now, what it does is it shows you the economic value committed. That's, however, only one metric that you should be looking at, and there's other ways of evaluating whether a chain or a protocol is viable and vibrant. One other metric to look at, and is popular, is in terms of like development commitments, so how much lines of codes are produced. The other one is you're looking at transaction fees and how often the chain is used.
Tell us a little bit more then about how much we should be reading into this drop that we've seen in TVL. Apparently, back in April, it stood at 160 billion. Now it's down to somewhere in the 70s, less than half. Is it just a case of technicalities around that drop? Because it looks pretty substantial when you look at those headline numbers.
We obviously will see TVL drop in a bearish market because most of the value on chain is in crypto, and so that will follow whatever repricing you have on the native crypto assets. What we've also seen is something very popular with DeFi protocols is liquidity mining. So they are incentivizing people to stake tokens into liquidity pools and issue rewards. Now in the bear market that we've entered, these liquidity mining incentives have disappeared in big scale, and so that could be one reason as well why we're seeing less value added into TVLs and liquidity pools. What I do want to say though is to put this into context, the last few months we've had major meltdowns of one entire ecosystem, Luna, where the anchor protocol itself was about 15 billion that went to zero, and we've had the collapse of two at least major CeFi players, Celsius and 3 Arrows. So there was big liquidity stress in the system.
Yeah, look, I just want to ask you about Solana as well. They seem to be having a little bit of a tricky time over the last week. One protocol apparently stacking on top of itself such that a dollar could be recounted several times. How much of a problem is that when it comes to TVL? Does it sort of nod towards how tricky it makes it to ensure we definitely understand what the value really is in this instance and not being manufactured or manipulated?
Yeah, the example you mentioned is a great one to show you the risk and that you can't just look at TVL as a metric of a DeFi protocol or chain. Basically, to my understanding, what happened there was there's two brothers that created multiple anonymous accounts and created DeFi protocols over each other. So when you stake, for example, you say you stake one SOL into Saber, it's one of the protocols, then you get a staked Saber back, and that token you stake somewhere else with another independent platform, then it's counted as staked assets there as well, and so that increases the overall TVL on the whole ecosystem. You can repeat that a number of times, and that's apparently what they have done. Now, the problem here is not so much about this going on, but because it was all done by anonymous developers that, in essence, at least what we've heard recently, all lead back to a handful of individuals. And so all that yield has been more or less just fabricated on top. And that's a big acquisition.
Do you think all the bad news is broadly priced in then, or is there something to knock over the clawback that we've seen lately?
Yes, so in terms of bad news, I mean, we still see chains halted, exchanges stopping withdrawals, all these kind of headlines coming out, just not in the same size and scale. And so market is just brushing these off because there is an expectation that there is stress in the system. And the major ones are now going into structured liquidation. For going forward, it will be very much macro dependent, and then obviously on that one event on the Ethereum side, where we're looking at the merge, and we're looking to see what's going to happen with chains afterwards for integration, for tail events, the risk and numbers there. Yeah.
All right, Bejamin, thanks a lot. Matrixport talking to us there.